Reserve Bank of India Governor Dr. D. Subbarao announced his last annual monetary policy on Friday. He has cut, as widely expected by the market, the repo rate by 25 basis points. We are here to discuss the implications, final implications of the monetary policy with Governor D. Subbarao. Governor, welcome to the show. This is your last policy and the backdrop is inflation going down, and it would go down even further. Do you feel a sense of relief?
Certainly, because inflation had come down. Inflation ruled in close to double digits for 2010, March of 2011. So there's been a significant decline now to less than 6%. And we expect it to be around 5.5% for much of this year, with some movement around that. But as we indicated in the document, we can't let our guard down. There are risks to inflation outlook, and we have to be vigilant to take action to endeavor to see that we get to the threshold inflation of 5% by March 2014.
But considering the macroeconomic scenario, this was the most comfortable time to present a policy in your entire tenure?
I can't really say that, but certainly it's been less difficult than on some of the past occasions. But at a global level, where this was the most comfortable or the most obvious solution option, I am not so sure. I'll have to jog my memory.
In March, while announcing the mid-quarterly policy, you said the headroom for monetary easing quite limited. This you said after a 25 basis point rate cut. And this time around, again after an identical rate cut, you said there is little space for monetary easing. Now, what's the difference between the two statements?
Precisely the change in language. We said there is little space for monetary easing, which is to say that unless the growth inflation scenario is more optimistic than we believe it to be, the space for further monetary easing is not there. What it means is that if the current account deficit improves more than we expect, or if the inflation situation moderates faster than we expect, or if the upside risks become more benign, then space might open up for further easing.
Otherwise, absolutely no space.
I cannot say absolutely no space, but if we wanted to communicate absolutely no space, we would have used the word no.
Or very little, you would have said.
Yeah,
you didn't even
perhaps.
Say
so we said little, which is what it means, that it's little as little is understood.
It seems that what is the inflation you are looking at? Could you tell me? Is it core inflation, is it wholesale inflation, or is it retail inflation?
We look at all of them. I've gone through this several times in the past.
Particularly in this context, when you say inflation is...
When I'm communicating, I communicate in terms of WPI. Okay, when you said about the benign inflation scenario, a short while ago, in answer to your first question, we were talking about WPI inflation. But for our overall stance, we look at WPI, we look at core, we look at CPI inflation, the new one as well as the old ones, and we look at a number of other factors. In fact, when we say that we're going to bring it down to 5%, it's not just the rate. We're going to look at the aggregates, the money aggregates that we've moved away from, M3, etc.
Governor, it seems that you have failed in monetary transmission. Your document says that you have cut the repo rate by 100 basis points in fiscal 2013, but the banks have reciprocated by only 1/3. They have cut their lending rates by 36 basis points. So when do we see banks cutting rates?
To say that the Reserve Bank's monetary transmission has not worked at all, I think will be an unfair and inaccurate characterization. You know that policy adjustment takes place in discrete intervals by discrete amounts, whereas monetary transmission is almost continuous if you look at the number of players involved. And also it takes time, and the experts tell me that it takes sometimes even 2 years for the transmission to take place. So we expect that not just today's action, but the action that we took over the last 1 year is still in transmission and will continue to transmit. Banks have a certain problem about deposit rates, and that they told us they're constrained about bringing down lending rates without bringing down deposit rates, and they're unable to bring down deposit rates for the reason that they have to maintain their liabilities. So I have some sympathy for that view, because the economy needs savings as well. Okay. So when you talk about transmission, I think you should look at both the lending rate as well as the deposit rates.
But you said you have sympathy. I thought you would say that they are very greedy. Their NIM is obscenely high, the kind of NIM they enjoy. So they should cut down their NIM.
I wouldn't say obscenely high. Okay.
It looks like they care more for their investors and the stock market, not their customers. No?
Well, I cannot have an opinion on all that. I'm going to look at what is of concern to the Reserve Bank, which is transmission. And I believe that transmission has taken place, as you yourself given some numbers, but it's not been as vigorous as we would have liked. But hopefully, if not tomorrow, in the months ahead, transmission will continue to take place.
You have taken some steps to restrain banks from selling gold and from importing gold. And gold, everyone says, gold import, everyone says is the villain, and the main reason behind our very high current account deficit. So what is your take on gold?
Well, I can give an entire speech on the gold issue, but gold has been one of the important factors responsible for the high current account deficit. I will not say the only one, but certainly one of the most important ones. Gold imports had gone up from 11-12 over 10-11 and 12-13 over 11-12. I believe our base volume import for consumption is of the order of 700 MT, but in the past 2 years it's been 1,000 tons plus. So as the price has started moderating, the demand will respond to that. How much it will respond is unclear, but to the extent gold is used for consumption, that demand might actually go up because prices come down, but investment and speculative demand will come down. The Reserve Bank is concerned about gold from 3 dimensions. First, from the current account deficit perspective, second, from a financial stability perspective, and third, from consumer protection. Over the last 1 year, we've taken a number of measures from all these 3 perspectives. And today's policy contains one important measure, which is to prohibit banks from importing gold on a consignment basis unless it is meant for export purposes. That should be seen in the larger context of all the measures that we've taken, both to restrain import of gold and to restrain lending against gold. And we've also advised banks to behave with restraint and responsibility when it comes to selling gold or lending against gold.
Governor, it seems that RBI is displaying what you call is sort of mother-in-law syndrome. Every time you do something and you blame the government for not doing anything. You are very nagging. I mean, will this continue, and how long?
If you read it that way, I cannot comment on that. But I believe that we've been trying to communicate the situation as we understand, which is that there's an expectation that the Reserve Bank reduces rates and the economy will start reviving just because of that. I think there's a responsibility on the part of the Reserve Bank to communicate that it's only one part of all that needs to be done in order to revive growth. So we do that as a sense of responsibility more than from a complaining point of view or from an adversarial point of view.
Is the government responding?
I believe so, certainly. I think the government it doesn't require the Reserve Bank to tell them. I think this is a democracy, so people tell them and they know that.
When do we see the new banks, first new bank?
Unlikely, but a sheer time frame, because receipt of applications is 1st of July. And even if we take a month for at least a month, perhaps we said 2 months for internal scrutiny and then remitting the whole process to a committee. So it's unlikely to take place. An actual letter of intent in principle approval is unlikely to be given before early September.
You have any number in mind?
No, we don't have any number in mind.
Governor, some time back after the so-called investigation, after the so-called money laundering, allegations on money laundering by a particular web portal, you instituted an inquiry. But it seems you are quiet about the findings of the inquiry. Instead, in this policy document, you said that investigation revealed the need for better regulatory compliances. So, what do you presume? They are not compliant with regulations? How serious are the offences?
Eventually, there will be some dissemination out of the findings. We may not put out the report itself in the public domain, but the broad findings of that will of course transmit into the public domain in how we respond, both by way of tightening our own regulation, by way of advising banks about their systems and processes. As far as the nature of transgressions is concerned, what we found is that it is not money laundering in that sense, that the money involved is not money involved in a crime. However, there have been violations of some norms, and not every violation is of the same degree of culpability. Some are more serious, some are less serious. So we'll have to take a view on that.
Will you penalize these banks?
I cannot guess at this point of time.
Finally, Governor, what we are seeing in Kolkata these days, deposit-taking companies going bust. Now, as far as Reserve Bank of India is concerned, in the past we had seen that you were gunning for Peerless and Sahara because they were taking deposits, and you were forming all sorts of rules. But now you are just keeping quiet. Of course, they are not regulated by you, but intellectually, any deposit-taking company should be regulated by you, right? For instance, you don't allow MFIs to take deposits because you say then they will become banks. And here, so many companies, they are taking deposits and they are going busts, but you are just keeping quiet.
Yeah, I have some sympathy for what you're saying, which is that to the extent that we regulate, we can lay down the norms for companies that we regulate about deposits, etc. But there could be hundreds of thousands of companies and unincorporated bodies which violate the norms. And Reserve Bank has a responsibility as a public policy institution to spread public awareness about this, to think through what needs to be done about the regulatory architecture for this, how our investigation agencies must respond, how our state governments, how our district administrations must respond. And that we've been doing. It's not been visible, but in some silent way, in every state, in every meeting with the state governments, we've been doing this. We've been training functionaries, we've trained police, we've trained elected and unelected officials of Panchayat Raj bodies. We've been writing to the state governments. So even if statutorily we're not responsible, we've assumed public policy responsibility for this, just as you are implying that we should be doing. Ultimately, the protection against this is greater public awareness. And that's what we must all be working towards.
Thank you, Governor. Thank you for your time. That was Reserve Bank of India Governor Dr. Subbarao after announcing a 25 basis point rate cut in his last annual policy.